Hey everyone, welcome back to Corporate Decoder, the place where we make sense of the money world and no one gets left behind. So, Avantor just dropped their Q2 2025 report, and let's just say things are a little complicated. Prepare yourselves because this report is a bit of a roller coaster. Alright, first things first, let's look at the big picture, the financial statements themselves. We got a lot to cover, so let's dive right into the numbers that actually matter. Now, looking at the balance sheet as of June 30, 25, we see that Avantor has total assets of about $12.8 billion. That's a pretty big number. But digging a little deeper, we see liabilities are even higher at over $6.4 billion. That's a lot of debt, which is always something to keep an eye on. On the asset side, we see accounts receivable is around $1.1 billion. This is money customers owe them. It's up from the end of last year, which usually isn't the best sign unless sales are soaring, which we'll check later. Inventory is up to almost $780 million. Companies need inventory to sell stuff, but too much inventory can tie up cash and risk becoming obsolete. We need to see if they're selling this stuff fast enough. Their total current assets are about $2.5 billion. These are things they can turn into cash within a year, like cash itself, receivables, and inventory. Now let's look at the liabilities are pretty hefty at over $2.5 billion, and a big chunk of that is the current portion of debt sitting at $125 billion. This is the debt that's due within the next year. Then you have almost $3 billion in debt that's due later. So in total, they have about $4.2 billion in debt. That's a serious amount of money they owe. On the equity side, their common stock and paid-in capital is around $3.96 billion. This represents what the owners of the company have put in. And then you have accumulated earnings, a healthy $2.3 billion. That's the profit they've made over time and kept in the business. Now let's move over to the income statement to see how they're actually making money or maybe losing it. For the 3 months ending June 30th, 2025, net sales were $1.68 billion. That's a slight dip from the same period last year when they brought in $1.7 billion, a small drop. But let's see if it gets worse. Gross profit, which is what's left after the cost of making the stuff they sell, fell from $581 million to $554 million. This is a key indicator that they're not making as much profit on each dollar of sales. Operating income also took a hit, falling from $175 million to just under $129 million. This is what they have left after paying for everything to run the business except interest and taxes. And finally, net income for the quarter was $64.7 million, down from $92.9 million last year. That's about a 30% drop, which isn't great. They also talk about adjusted operating income, and for this quarter it was $257 million, down from $277 million last year. They're trying to show us that even after some adjustments, the core business is still profitable, but this number is also down. And if we look at margins, net income margin fell from 5.5% to 3.8%. That means for every dollar sales, they kept less than 4 cents. That's a pretty tight margin. Their adjusted EBITDA margin, a measure of profitability, before certain big expenses, also slipped from 17.9% to 16.6%. The report breaks down sales by segment, and the laboratory solutions part saw a 2.9% drop in sales. They blame this on less demand and the sale of their clinical services business. But the bioscience production segment actually saw a 2.6% increase in sales thanks to higher volumes in things like silicons and bioprocessing. So one part of the business is doing okay while the other is sputtering. Looking at gross margin, which is really important for understanding the health of a business from the get-go, their gross margin dropped by 1.2 percentage points. They attribute this to inflation, meaning their costs went up more than they could charge their customers and the sale of that business unit we just mentioned. Now, Avantor is also pushing a cost transformation initiative, expecting to save around $400 million by 2027. This is a good strategy to combat those rising costs we just talked about. Let's peek at the cash flow statement. This shows us where the cash is coming from and where it's going. For the first 6 months of the year, they generated $263 million from operations. That's down from $422 million last year. This drop is a big red flag because it means the core business activities are bringing in less cash. They spent $57 million on capital expenditures on things like buildings and equipment. This is a necessary investment for the future, but it does reduce the cash available. And this leads to their free cash flow, the cash left over after all necessary investments. It was $207 million this year, down from $342 million last year. That's a substantial drop of over $130 million. This is the cash that can be used for dividends, paying down debt, or new opportunities. Less free cash flow means less flexibility. On the financing side, they borrowed less money this year compared to last, but they also paid down a lot of debt. They repaid $327 million in debt over the first 6 months of 2024. This year, that number is much lower at only $38 million in repayments. Interestingly, the report mentions Michael Stubblefield, their CEO, adopted a trading plan to sell some of his company stock. This is fairly typical, especially after a report like this, but it doesn't necessarily mean anything bad. They keep mentioning the divestiture of their clinical services business earlier this year. This was done to refine their business model. While it can streamline operations, it also obviously impacts sales figures and makes comparisons to prior periods a bit tricky. And inflation is a big story here. They're feeling it across the board, and while they're trying to manage it with pricing and efficiency, that's always a challenge. They are serious about cutting costs, aiming for $400 million in savings. Executing these cost-saving plans will be critical to improving their profitability, especially with those squeezed margins. There's also a mention of a reserve for certain legal matters. This is about $3.6 million, and they say it's unrelated to their core operations. In most cases, this is just a normal part of doing business, but any significant legal issue can always be a wild card. They have environmental liabilities too, like a $2-3 million obligation in New Jersey for groundwater issues. While they are indemnified for this, it highlights the ongoing responsibilities companies have to manage environmental impacts. Scroll turn now to my take on Avantor. What's the story here? Well, it looks like Avantor is navigating a really tough economic environment. Sales are slightly down, especially in their laboratory solutions segment, which sounds like it's hurting from reduced customer spending. The gross profit squeeze from inflation and that divestiture is also a concern. Free cash flow dropping significantly is also something an investor would want to watch closely. The good news is that the bioscience production segment is showing some promise, and the company is actively working on cost savings through their transformation initiative. This is a smart move to try and offset those inflationary pressures and revenue challenges. However, the declining profitability margins and free cash flow are undeniable headwinds. They need to see that cost transformation plan really deliver and find ways to boost sales in their struggling segments. A big part of their strategy is also innovation, so we'll have to see if those new product developments pay off soon. Overall, Avantor might be a company in transition facing some significant economic challenges. Their ability to manage costs and drive growth in their key segments will determine its direction. Alright, that's our breakdown of Avantor's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.